This is our Forex blog for July 27th, 2011. I was away for vacation for the last week, so I didn't do this for the last week, but we have about 150 previous trading days. I rarely leave, so we have a ton of past classes in chart days for you to analyze and compare to your other charts. Most days we want to buy the strongest pairs versus the weakest. The dollar is very weak. The monthly trend's down. One of the strongest ones is the Swiss. So you could start off by starting the day off looking to sell the dollar Swiss. Keep in mind this is an extremely weak currency. It's down a tremendous amount. When it's above the hourly and breaks down, you want to go short. You can use our trailing stops, to get you out. This one really only pulled back about 20 pips. Coming up to 5 o'clock, the dollar, just simply wasn't the weakest one. The weakest one actually today was the euro. All the time frames are down. It was by far the weakest one at 2 o'clock. If you look to sell the euro Swiss, you can see a much better drop. It falls about 50 pips here, you get a little pullback, another 25 pip move. You go short right here, you might have lost. Short here and made 10 pips. Short here, and the market fell, almost 100 pips. You never know which move is going to be an absolutely huge one, but by looking at the currency meter, most days, if you focus on the ones that are weakest, like the euro, versus the ones that are strongest, and stronger on all time frames. Another one that was strong was the Australian. It's also strong on all time frames. You can also short the euro Australian. The weakest currency, the euro, versus one of the strongest, the Australian. You can see an absolutely huge 125 pip move here, and then the market goes sideways, breaks down again, moves another 50 pips. You got a little bit of a pullback here. You might have gotten out of that with a small loss. 25 pip win, 80 pip win. The key is you're never going to have 100% winning trades, but when you're focusing on selling the weakest currencies, or the bottom three weakest, the euro Swiss would have been one to sell, the euro Australian obviously, and the third strongest one later on in the day was the dollar. So selling the euro dollar also made tremendous sense. Let's bring this up and show you that. Now, also on top of that, the euro dollar had a counter trend 4-hour signal right here, which usually is the end of the move, and most of the time it's soon after, within 6 or 8 hours, you're going to get most of the time a 50 to 100 pip counter trend move. And this one came up and double topped here. Good place to go short, knowing that there was a major counter trend signal going on, and it fell about 25 pips, 25 pips, 40 pips. Basically you're selling every counter trend move up, and this last move down was just dynamic. It fell over 100 pips. So selling the euro Swiss, euro Australian, and later when the dollar became super strong, the euro dollar, very high probability trends today. You don't want to really buy two currencies that are both strong, like the Australian and the dollar. At one point one might be slightly stronger, and at the other point the other one's slightly stronger. Usually you're going to get chop. Here's the Australian dollar, and you can see it kind of went up 20 pips and then fell. The dollar is obviously less strong than the Australian. You can see the longer term, or actually the dollar became stronger than the Australian, even though the longer term trend of this is up. There actually was some moves here, just because the intensity of the dollar's strength was so strong. But most of the time, when both currencies are strong or weak, you get really choppy price action. You want to focus on currencies that are more likely to move one direction and one direction only. The CAD, longer term trends down. It, for the most part, had severe weakness for about an hour, then another hour, which means you can look for buys in the dollar CAD. Notice when price is above the hourly, it's much more likely to go up. This one pulled underneath the hourly and really didn't break the lows right here. The trailing stop got hit. You would have been long here around 28 and out at 73. The trailing stop uses our statistical trend tools. The stronger it is, the wider the stop is. As soon as that strength lessens or any kind of weakness comes in, we yank that stop up so that you can try to catch as much of the trend move as possible.